Good afternoon. Welcome to 𝐾𝐿𝐼𝐴 TV. This is Sage reporting to you live from the Sydney studio. And it's lunchtime here, so you know what that means. It's time for the Mid-Market Pulse. And in today's show, we'll take a look over the Australian share market's performance, stocks that are making headlines, and we'll also take a look at the top gainers and losers into the afternoon. So Australian shares fell further by the afternoon after making a negative start amid sell-offs in the big banks and energy stocks. The disappointing corporate earnings coupled with corrections in commodity prices weighed on the market sentiment. And many companies remained cautious on their respective outlooks due to business disruptions caused by the COVID-19 pandemic. The benchmark index ASX 200 was currently trading 0.41% lower by lunchtime, and during the day's trade so far the index declined as much as 0.5% to hit an intraday low. And moving on to the sectoral front. 8 of the 11 sectors were bleeding in the red. The energy sector topped the chart with a 1.6% loss, followed by financials, which dropped over 1%. Consumer discretionary, information technology, utilities, healthcare, telecom and industrials were also among the notable losers. And meanwhile, material was the best performer with 0.7% gains, followed by AREIT and consumer staples, which rose marginally higher. The rise in COVID-19 cases also kept investors sidelined, and in the past 24 hours, New South Wales recorded 478 new locally acquired infections and 7 deaths, while Victoria registered 22 cases, and today's figures are the highest number of daily case tally and deaths recorded in a single day since the beginning of the pandemic. The Victorian government is considering extending the lockdown beyond Thursday, with new clusters emerging in different parts of Melbourne. And let's now turn our attention to the biggest gainers and losers into the mid-market session. Bendigo and Adelaide Bank were the top percentage losers on the ASX, falling over 9% after reporting earnings results. And some of the other notable losers include oil producer Beach Energy, real estate firm Lendlease Group, cloud-based wagering platform PointsBet Holdings and financial firm Hub24. On the flip side, infant formula company A2 Milk topped the gainers chart by rising 9.6%. And some of the other top performers were metal recycling firm Sims, real estate firm GPT Group and the gold miner Silver Lake Resources, as well as the agro-business Grain Corp. And now, before we take a look at the shares that are in the news today, it's time for a short break. Property by 𝐾𝐿𝐼𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐾𝐿𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾𝐿𝐼𝐴. Welcome back, Sage here. You're watching 𝐾𝐿𝐼𝐴 TV live from Sydney. This is the Mid-Market Pulse show. Let's now take a look at some of the headline grabbers of the day, and the shares of Beach Energy dropped over 6% after the oil producer reported a fall in revenue and profit for the financial year 2021. The full year net profit dropped 37% while revenue fell 10%. The company's board has also declared 1 cent per share dividend for shareholders. Commenting on earnings, Managing Director Matt Kay said that while financial year 2021 was a challenging year for Beach, on the western flank the company remains in a strong position as it delivers on its gas growth projects, primarily in the Perth and Victorian Otway basins. On financial year 2022 guidance, Mr Kay said that Beach expects production to be further impacted by the declining western flank fields ahead of the ramp-up of production in the Perth Basin and Victorian Otway Basin development projects. Also making the news, shares of BHP Group rose 1.15% amid the report that Woodside Petroleum is in talks to acquire its petroleum business. The acquisition would boost Woodside's position in Australia's oil and gas sector at a time when its position is under threat from the proposed merger between Santos and Oil Search. Meanwhile, Woodside, in an exchange filing, confirmed that it is engaged in discussions with BHP regarding a potential merger involving BHP's entire petroleum business. The company said that the discussions are ongoing and have not reached conclusion. And moving on, shares of electronics retailer JB Hi-Fi were down marginally after its sales were hit by lockdown restrictions. The financial 2022 sales for the year to date were down 14.9% in Australia due to disruptions caused by the COVID-19 restrictions. Amid the ongoing uncertainty arising from the pandemic, the group has also deferred financial year 2022 sales and earnings guidance. For financial year 2021, the net profit rose 67.4%, while the total sales were up 12.6%. The company's board also declared a final dividend of 107 cents per share, fully franked, bringing the total dividend for financial year 2021 to 287 cents apiece. Next up, the share price of BlueScope Steel rose 1.7% after the steel manufacturer more than tripled its final dividend after profits surged during the 2021 financial year. The company has also announced an on-market share buyback of up to 500 million Australian dollars. For the financial year 2021, the net profit after tax zoomed 1,137%, driven by strong demands and steel spreads. The sales from continuing operations rose 14% and boosted by the robust earnings, it declared a final ordinary dividend of 25 cents a share, more than triple what it paid a year ago. It also paid a special dividend of 19 cents a share, and the company also made a further significant strategic announcement today, stating its goal of net zero greenhouse gas emissions by 2050. Achieving the 2050 net zero goal is highly dependent on several enablers, including the commerciality of emerging and breakthrough technologies and the availability of affordable and reliable renewable energy and hydrogen. It also depends on availability of quality raw materials and appropriate public policy settings. And let's move on again, this time over to Bendigo and Adelaide Bank, who saw its shares falling 9% despite announcing dividends for the financial year 2021. The bank declared a final dividend of 26.5 cents a share. For financial year 2021, the net profit increased 172% and cash earnings rose 51%. The net interest margin declined 7 basis points to 2.26%, reflecting significant growth in fixed lending and competitive new business rates. And besides, the lender has also agreed to buy Melbourne-based fintech Ferocia for up to 116 million Australian dollars in shares, giving its ownership of the banking app up. And up next, shares of Sydney Airport were down 1.3% after it rejected a revised proposal from the Sydney Aviation Alliance. The consortium made a revised offer of $8.45 or $8.45 Australian a share after the Sydney Airport rejected its initial $8.25 Australian a share bid. The board of Sydney Airport said that the revised bid continues to undervalue the business and is not in the best interests of the shareholders. The board, however, maintained that it is still open to engage with the Sydney Aviation Alliance if the consortium is prepared to lift its indicative price. And now, before we look at some more of the shares that are in the news today, it's time for another short break. Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐊𝐴𝐚 TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐊𝐴𝐚 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐊𝐴𝐚 TV. Welcome back, viewers. Thanks for joining us. Sage here. You're watching 𝐊𝐴𝐚 TV live from Sydney, and this is the Mid-Market Pulse show. We were continuing to share the newsmakers for the day, And the shares of carsales.com dropped over 1% after new and used car sellers reduced its final dividend despite rises in earnings. The company declared a final dividend of 22.5 cents compared to 25 cents last year. And for the financial year 2021, the revenue from continuing operations rose 8.4%, while net profit grew 14%. Let's move on again now to shares of Steadfast Group, who have entered a trading halt ahead of a proposed capital raising. The Australian large general insurance broker said the capital raising would include an institutional placement and a share purchase plan. In a separate development, the company has acquired insurance broker Coverforce for 411.5 million Australian dollars. The deal will be fully funded through an institutional placement and a scrip consideration. The merger of Coverforce into Steadfast represents a unique opportunity to further strengthen Steadfast as the largest general insurance broker network and largest group of insurance underwriting agencies in Australasia. And lastly, GPT Group's shares rose over 3% on robust earnings. The company has posted 246% rise in profit during the first half of the year, and the total revenue jumped 180%. It also declared an interim distribution of 13.3 cents a share compared to 9.3 cents announced a year ago. And thanks for your company on that report. That's all for now. Keep watching 𝐊𝐿𝐴𝐼NE TV as we bring you the latest news and trending market updates live from